There's a lot of people talking about $3,500, $5,000, $25,000 gold, and they're like cheering for it. And to be honest, like I don't think we want that. I mean, $3,500 gold, I could see that being the world and financial advisors in the financial system reallocating gold to everyone's portfolio, trying to give them that 1, 3, 5%, which is right now it's like way undervalued. Like I think the average portfolio might have like a fraction of a percent, if any. So I think if just the financial system started to pull gold into it, I think we could probably safely go to 3,500 for gold. But I mean, 5,000 or a 10,000 or $25,000 gold, I mean, we might not really, you might want to be living on your own island.
Most precious metals analysts and popular investors believe we are on the verge of a pronounced bull market for gold, silver, and possibly even other metals and commodities. According to the various charts, macro and technical analysis we've seen over the past few months, these expert analysts are predicting a severe economic decline in major economies across the globe. Some have described the impending economic downturn as a recession, some call it a depression, and many have predicted that it would be worse than the 2008 financial crisis. While many of these analysts don't agree on the intensity or even duration of the impending crisis, they do agree that it will be great for precious metals like gold and silver. Many have argued that the coming crisis will be caused by the constant currency devaluation caused by central banks printing again and again to pay off their massive debts and debt expenses. Though the devaluation of fiat currencies like the US dollar has been ongoing for decades, many people are just catching on that it will have dire consequences and that we may be at the end of the road. Now we have more iconic billionaire investors like Ray Dalio and Bill Ackman talking about the impending collapse. As a result, investors are waking up to the reality and quickly taking shelter in gold and other safe haven metals. According to Chris Vermeulen, a popular technical analyst and trader, more investors, including larger investors like money managers, pension funds, and family offices, will be rushing towards precious metals when the next crisis hits. Chris is certain that when that happens, gold prices will rise quickly and could even go over $3,500 per ounce. We will now bring you clips from Chris's recent interview with Jay Martin. Please watch, share and like this video, subscribe to the channel, and drop your comments in the comments section below. Thanks and enjoy the video.
Gold is the strongest because gold to me it's the global safe haven play. Most people move to gold because it's the first physical asset that typically comes to their mind. That's kind of like an alternative asset. And what's nice about gold and why I think a lot of people go to it is because it moves slowly. A big day in gold is like a percent and a half. Those are pretty rare. So the slower something moves, typically the more money you can dump into it without panicking. The stock market's very volatile, oil or natural gas, right? Those things can get pretty extreme. So gold is holding up near all-time highs. The monthly chart shows a massive cup and handle pattern that points to the next stop, if it breaks out of here, is going about 2,700. And maybe we're going to see a rally up to 2,700 before we see a stock market correction. I'm not sure. I mean, that's the nice thing about the technicals. We just have to wait for a breakout and see this pattern start to confirm above, the highs here. But people are holding their money in gold. Gold is holding up near the highs. One of the things is if you actually look at gold and oil, they tend to do very well 1 or 2, like within the last kind of 2 years of a stock market, bull market coming to an end. They're the last two commodities. We saw in 2007, we saw a massive blow off in crude oil, and then it pulled back to a consolidation phase. The charts show it really, really well. And then we went into the financial crisis and oil tanked even further. Well, we had the 2022 bubble in oil. It's now pulled back. It's consolidated, very similar to the 2007, 2008 pattern. Gold is doing the same. It's trading up near the highs. It's holding its value. Those are two early warning signs that the stock market is coming to a financial reset. People are moving to these physical metals or physical commodities. So I am still bearish on them. I do think we're going to see a recession hit and everything pull back a little bit. It would be nice if gold would break out. I don't think it's going to break out. I actually think we're going to get hit with selling and it's going to pull back. I know it's getting exciting because it's right back up at those highs, but we've seen gold hit these levels up in that 2080 level several times, and then it's sold back down. And I feel like I feel the same vibe in the market. People are getting excited. They want it to break out, but we're not seeing commitment in the space. If you look at the gold and silver miner stocks, they're down like 50% from the highs. They should be like way up there threatening to break out to new highs. And there's just not any big money moving into those leverage plays. Typically, we'll see money moving into those leverage plays before the physical commodity usually breaks, is what I've found. So the fact that they're underperforming and lagging is just telling me big money isn't really piling in there yet, which I think is going to make for an even better opportunity down the road, because to me, they're pretty undervalued. I think there's a lot of potential for those gold miners just to get back to the highs from 2011. And of course, they can go way beyond that. At that point, I think gold could be at 2,700, 3,500. I mean, we're probably going into like a 5-year rally for gold and precious metal space. Yeah, that's kind of my take on it. Second part you brought up there is a really good point. I mean, there's a lot of people talking about $3,500, $5,000, $25,000 gold, and they're like cheering for it. And to be honest, like I don't think we want that. I mean, $3,500 gold, I could see that being the world and financial advisors in the financial system reallocating gold to everyone's portfolio, trying to give them that 1, 3, 5%, which is right now it's like way undervalued. Like I think the average portfolio might have like a fraction of a percent, if any. So I think if just the financial system started to pull gold into it, I think we could probably safely go to 3,500 for gold. But I mean, 5,000 or a 10,000 or $25,000 gold, I mean, you might want to be living on your own island away from people. It could be like wars and people stealing and like, I mean, a dangerous time, right? High gold prices. I'm not betting my money on high gold prices. I don't really want gold prices to go crazy high because it means we're going to be in really difficult times. You know, it might not be too bad if the currencies collapse and that does most of the heavy lifting, but I mean, high gold prices means usually higher issues.
Chris is certain that gold could easily rise above $3,500 when institutional investors increase their allocation to the precious metal. However, he is not in the camp of gold bugs predicting massive 10x increases in the metal's price. Though Chris does not completely rule out the possibility of gold prices increasing to $20,000 or above, he explains that such huge increases in the metal's price will occur in the most terrible conditions. If a third world war broke out, for instance, tens of millions of investors in and out of the United States will be rushing to their local bullion dealers for safety, but that gold could and would go up dramatically during a period of crisis, either from a war or the complete collapse of the global economy, is enough reason for us to stack as much as we can now. Though nobody wants to see these events unfolding, it is only realistic to prepare for them given how much damage our governments have done to our systems over the years. During the interview, Chris also gives his outlook on the economy. The popular technical analyst is convinced that the U.S. economy is heading for a severe recession that will negatively impact all asset prices. However, the effect on gold and other safe haven assets will be short-lived, lasting only as long as it takes for people to really realize they need to get out of assets that do not really protect their wealth. Let's get back to the interview.
You know, a couple of months ago, everybody was super bullish, and I know advisors across the board and general investors were thinking, hey, 2022 was the bear market. They're in their heads. The average investor outside of this space, obviously we live and breathe it, but the average investor, I think, is thinking that we're going to start another major bull market that's going to last 5 or 10 years. You know, we just had that correction. So mentally, they're just thinking this is a pause. And I mean, there's different stages to the market. And I believe we're in this kind of complacency stage for a lot of people. They think there's good times ahead, but it might be slow for a while. But the reality is, I think this market is really on the verge of rolling over. And I don't think that people understand the potential impacts that are around the corner if things turn to the downside. And, you know, I know a more aggressive and active investors, they're definitely in that kind of hold mode, kind of debating, is this market going to break down? Do I need to take some serious action to avoid a collapse or profit from it? Or are we going to start into a new bull market? So, I mean, the active investor kind of like, our kind of bubble that we're in, I think a lot of people are just treading very lightly here because the shoe could drop at any point. But the average investor, I don't think they realize what could be around the corner and how devastating it could be and how long this could last. I think this is coming into like a tech bubble style burst where it could be a very weak market for 2 or 3 years. It could take 10 or plus years to fully recover from what's going on. Everybody just had this euphoric phase where everybody was making a ton of money. Everybody became the wealthiest they've ever been because everything you own doubled or tripled in value. And when you usually go from one extreme to the other, everybody feels like $1 million, and then suddenly you hit rock bottom and you're like, how did that change so fast? So that's the big swing that I think is coming. And I think people need to be mentally prepared, financially prepared. There's going to be asset classes that are going to perform exceptionally well. Most of them are not. So it's definitely going to become more of an active investor or a trader's market potentially for quite some time. So I should state one thing, because I always try and give out both sides of the picture, and then some people always get confused. They hear it, they're like, well, he says it could go either way, right? So I'm not a doomer and gloomer, but to me, the technicals and everything coming around puts me in the camp that I think we're in for very rough times. Some people are saying we're going into a recession. Others are saying we're going into a full-on depression. As much as I don't want to think of either of those, I have a feeling that's going to happen, which we can touch on. But I personally just think these markets are getting very weak. We're seeing, interest rates are, we've gone 40 years down. Now we've turned a major corner. Interest rates are going up. They might stay up for a while. And typically after rates go up, especially this is like the fastest rates I think have ever climbed. We always see a recession kick in, and it's going to be a big reset across the board for a lot of asset classes, especially here in Canada. When you look at the real estate market, I mean, in the States, you can lock in a mortgage for like 30 years a rate. But here in Canada, I mean, it's like a 3 or 5 year are the two most popular. And a perfect example is I was talking to a mechanic, is getting my truck fixed, and he's driving me home. We're having small talk. He's like, hey, do you need to buy a property? He says, I'm selling. And I'm like, not really. But he told me his whole story. And here we are 3 years right after COVID. His 3-year mortgage comes up for renewal in April. He goes from 1.9%. He's going to be renewing at like 6%. He says, I don't even make enough on a monthly basis to pay triple my mortgage. He says, I'm not going to get approved. I have to sell it. And this is like the tip of the iceberg of one asset class that is going to probably, at least in Canada, get absolutely annihilated. Next year is when those mortgages kick in. As soon as we start to see, unemployment start to spike up and things slow down, banks are going to stiffen up even more. So there's a lot of really difficult times, I think, in the real estate space coming around. And that's what's probably going to hurt people more, the average investor first. They're going to realize when their mortgage rates jump up, they're going to start to see a lot of pressure just there on their bank accounts.
In the United States and in all other major economies, a serious crisis looms. The commercial real estate industry, worth about $20 trillion, is being severely impacted by the Federal Reserve's unprecedented pace of rate hikes. Some $1.5 trillion in mortgages will come due in the next 2 years, but property owners are not even waiting until then. In the past few months, there have been reports of several property owners cutting their losses early and just walking away. The burden will now fall on banks, most of which are the same regional banks still reeling from the previous banking sector crisis. All of these events will combine and culminate into a lot of chaos that could bring down several other sectors of the economy. Please share your thoughts on Chris's interview in the comment section below. If you are yet to do so, also ensure you like this video and subscribe to the channel for more videos. Thanks for watching.